Hello, everyone. Welcome. Hi, sir.
Hi,
Simeon.
how are you?
I
Joy,
apologize.
right?
Yes,
Yes.
I'm
Nice
still.
to see you. You have such a beautiful smile.
Oh, thank you. I apologize for the late broadcasting. I'm still working on the pages, but yes, you are going to speak today, sir, right?
Yes.
Okay, thank you.
Should I start now or should we wait a few minutes?
Okay, let's just wait a few minutes. I'm just going to welcome everyone. Thank you for waiting, and thank you for joining today. Um, see, it's here. Um, so- Hi, Carl, Heidi, Gary, Jesse. Oops, people are coming in. And Lori and Brenda and Mary's iPhone. Welcome, everyone. Hi, Sandy. Okay.
And I also want to welcome everybody as well.
Today, if I am correct, Sir Simeon, you're going to talk about crypto taxes, right?
Yes.
Okay. Yes. Okay, I think we're ready to start, sir, if you're ready.
Okay, good.
Thank you.
First of all, I want to thank everybody for praying for my wife. I saw someone in the chat ask how she's doing. Um, she's doing okay. I mean, she's hanging in there. And she's got some serious health issues, but she's had them for 8 years, and well, maybe even 10 years. I've lost track, and but she's still alive. The doctors can't understand it, and but I can, because I have a supernatural God who is keeping her alive supernaturally, um, and I strongly believe that she will be healed, and I fully expect to give a testimony on one of these calls in the near future, hopefully. So thank you for all your prayers. Continue to pray for her. And once again, we both thank you. Okay. Um, an interesting talk. I mean, all of it's kind of review, but it's at a critical juncture where I think it's imperative that we revisit some of the things that we have talked about over the last year. And the reason why, um, I was on the phone with Erwin the other day, and I told him I would be teaching. And I also told him there's absolutely nothing new in crypto as far as laws coming out. So everything I've already taught, there's no changes. So I told them I was going to probably do just a question and answer because it's tax season. A lot of you are either doing your own returns or prepare or getting them done. Maybe you've already had them prepared. But at the end of our little talk, I'm going to open up the floor for questions. If anyone has any tax questions, it does not have to be crypto related. It can be um, any tax question that you have. But what we decided that we would talk about is, since we're at a juncture where many of us could be selling out, and we're hearing how there's going to be large gains, and that we're going to be selling a lot of the coins and moving into other investments like metals and so forth. Some of us are going to have large gains. Some of us are not going to have as large gains, but I imagine most of us are going to have taxable events on our returns. And I think it's important at this juncture to understand what you're up against when you file the following year, and how we can maybe minimize our gains. So I thought that would be an interesting topic, and I think it's appropriate to do that. So many of us, we've purchased crypto in many different ways. Some have purchased in an IRA, traditional IRA. Maybe some of you have purchased through a Roth IRA. Maybe someone has on this call has purchased it crypto through a 401k, either cashing it out or taking a loan against it. And then there's others like myself who have invested in crypto outside of retirement assets with non-retirement assets. And depending on which way you invest is going to determine what's going to happen to the money that you make. And I thought that would be an interesting topic for tonight. So we're going to look at a scenario. We're going to assume that you've bought either one coin or a number of coins. You get out of those coins and you either take it out in cash or you buy different coins, exchange one coin for another. Well, so let's assume you have $100,000 gain. Like maybe you put in 10,000 and it's now worth 110,000. That's a good example. So now you get $100,000 gain. So we're going to talk about all four scenarios of how you might have invested in it and kind of give you a picture of what you're going to be thinking about over the next year. Because don't forget, if you have a gain of $100,000 right now, let's say in April, that doesn't mean it's going to be 100,000 in December, because you're still it could be 500,000. You could have a loss. There's so many different things that can happen between now and December, depending on what route we take. So if you and again, if you have any questions about what my talk is, put them in the chat. I have the chat box open. I'll answer them as I teach. If you have a question that's not related to what I'm talking about, I will address it at the end. So if you purchase your $10,000, let's say that was the example, from a traditional IRA, and you have $100,000 gain, so you get back 110,000. That's not taxable to you. Why? Because the gain's inside your retirement account. All gains and losses are not reportable on your return. I think most of us know that. However, if you have a $100,000 gain and it's sitting in your IRA, you can't spend it. It's sitting there. You can't take it out unless you pay taxes on it, unless it's a distribution. So if you're wanting to use that $100,000, and again, it could be a $10,000. I just used a number of 100,000 because we're hearing, 8 times, 7 times, 10 times. And so it could conceivably be that. So if you have $100,000 and you can't spend it unless you have a distribution in an IRA. So the only way you can get access to it is to take $100,000 distribution or whatever you choose to. You might want to take 30. You want to pay off a home equity loan. You might want to give 5,000 to your church and do 25,000 with something, buy a car. There's whatever you choose to do with that money. Okay. You got to take it out and pay taxes on it. Okay. At ordinary income rates. So if you're in a 22% bracket, you're going to pay 22% of $100,000. Well, yeah, of $100,000 because you're taking it out of your IRA. Any questions so far? Put them in the chat. Okay, so now you got this ordinary income. That 100,000 could put you in a higher tax bracket. If you already make 100,000 from your salary, and now you have another 100,000, now it's 200,000, you might get pushed up a bracket. And if that $100,000 is higher, 200,000, 300,000, you definitely are going to be pushed up in a bracket. So you have to think about all these things. you have to think twice before you invest through an IRA because of the fact that the use of the funds is limited. And now, if you already have enough money for retirement in your IRA and you really don't need an increase, that might not be the way to purchase it. You might want to buy your crypto through another way. If you don't have a lot of money in retirement, this could be a way where you could really capture a large gain quickly, keep it in your retirement fund, and use that to fund your retirement. And remember, some of these prophecies are saying 10,000 is going to be 1,000,000. If you have 10,000 invested in SHIB, you could conceivably have that soon. So, so you say, well, I only have $10,000 in retirement. Well, now you have 1,000,000, if that ends up being the case. So there's a good reason to invest in it from an IRA, and there's not so good a reason. Again, you got different people on the call. You got 14 people on the call. You might all have a different scenario. So just remember all these things. If I mentioned in previous talks that you can donate money to charity through an IRA. So let's assume you make that $100,000 in your IRA and you can't spend it. You don't want to take it out because you don't want to pay tax. But you don't want to just sit in there. And let's assume a scenario where you normally give $15,000 to your church every year. Let's assume you tithe and you make $150,000. And now you got another 100 grand and you want to give a $20,000 donation to your church, and so you can write a check out of your IRA and you can give that money to the church through your IRA, and it's not income to you, but it's also not a charitable deduction. But who cares? And here's why. If I give 15,000 a year in tithes and I want to give another 10, I could write one check for 25 grand, and guess what? That covers my tithes the whole year. You can pay it all in one shot. Okay? You don't have to tithe during the week because you already paid it. It's already gone to the church in one lump sum. And all that money you were paying on a weekly basis out of your post-tax earnings, after your tax, this money from your W-2 earnings is now yours to keep because you've already given it. So think about that. If you have gains in your IRA and you don't want to take it out, and it's not like, millions of dollars, if it's thousands or hundreds, 10, 30, 20, $30,000, consider it doing that. You don't get the tax deduction, but who cares? You take care of your tithes, you bless the church, and at the same time, you're not going up into a higher bracket. And your disposable income actually goes up because you're now not given that weekly tithe because you've already given it out of your IRA. Very good tax planning tool. I plan on doing that if and when the time comes. I won't say if, I'll say when the time comes. So that's a really good tax planning. There's no distribution, there's no charitable deduction. I mentioned that. Any questions on that before we move forward to the second scenario? If there's any questions, either raise your hand, put it in the chat. If you don't understand something, I will repeat it and try to explain it a different way. There's a hand up, Gary.
Hi, Simeon. How are you?
Hi, Gary.
I know for like converting a 401k over to gold or silver, you have to have most of them like a minimum of $5,000 or $10,000.
Right.
Is there some kind of minimum like that to invest in crypto? Do you know?
I don't believe, well, you mean through a 401k or any
Yeah,
type?
through a four, because all I have is a
I don't
401k at
know.
work now.
Yeah, I don't know maybe someone on the call knows as if there's a minimum. I wouldn't think there would be. There's no minimum if you want to open up a Coinbase account. There's no reason why you can't do that. And if you open up, you can open up a Coinbase account and don't have to put a minimum in it. So I wouldn't think that there would be, but I'm not sure. I just found out that my IRA, Laurie just says, I found out that my IRA custodian will only do distribution to me and not directly to church. That's unfortunate. I imagine that White might not be. I mean, I don't know the reason why. I can't, but it's unfortunate. Now, when I was talking about giving, and I'll get back to your question, Gary. When I was talking about giving money to the church, I wasn't necessarily saying donating crypto. I was saying writing a check, which is what Lori mentioned. So getting back to your comment, Guy, I don't think there's a minimum, but there could be. I'm not really sure. And I believe that would depend on who's handling your 401k.
Okay, I can give them a call, but I didn't
I
know
don't
if you
think-
knew offhand.
Yeah, no. Well, I don't think it would be a minimum regarding the exchange. It could be a minimum if you're buying it through your 401k. There might be a minimum.
That's what I was referring to, buying it through
Yeah.
the 401k if there was a minimum we had to
Right.
have.
And there could be, but if there is, it would be an individual thing within each company. That would be my guess. So you'd have to
Okay.
ask them. Yeah.
Thank you.
Okay. So anyway, you should don't wait for you to have gains in your IRAs. Like Lori just found out that she can't do that. You know, everybody on this call should really call their broker or whoever has their funds and should ask that question. I'm going to be very frank. I don't even know if I can do it through mine. Lori, I haven't even tried it yet. So my brother handles my investments and he's coming to my office tomorrow morning and to get his taxes done. And that's going to be a question for him because I really don't know if I can do it. I've seen clients of mine do it, so I know it's available. I guess it just depends on, who you have as a broker, which is unfortunate. So now a second option. Now you purchase through a Roth IRA. Now you've got your crypto in a Roth IRA. We're going to use the same example. Again, there's no tax implications. It's a retirement account. You buy and sell, the gains or losses are not reportable. So that's the same as a regular. If the money's sitting in your Roth IRA and it's been invested for over 5 years and it's just sitting there and it grows by the $100,000 gain that we're referring to, you can take the money out of the Roth, not pay any taxes. It's not like a traditional IRA. So here's a situation. I very rarely recommend Roth IRAs to people. I don't like them necessarily. I think there's more disadvantages than advantages. However, a year and a half ago, I wasn't in crypto. So now that I'm talking more about crypto and investing in it and learning more about it, I'm seeing how there could be an advantage in a Roth IRA if the money was sitting there, because then you can take the money out tax-free because you didn't get the deduction when you put the money in. Therefore, when it comes out, but you got to hold it. It's got to be in there 5 years. The principal's got to be in there 5 years. So that's an advantage over a traditional IRA. However, let's assume you just opened up a $15,000 Roth IRA. Let's assume $7,500 for you, $7,500 for your spouse. You now have $15,000 in a Roth IRA, and now you want to invest it into crypto. Let's assume you did already. It grows to 100 grand. Well, now you really can't take it out and not pay taxes on it. Why? Because you haven't had it in there 5 years. So again, probably almost no one on this call, other than maybe a few, have been in this longer than 5 years. So, as time goes out longer, as that you get closer to that 5 years, you'll be able to take money out, but not right away. And there's penalties too. So, and if you're under age 59 and a half, and you're in a traditional IRA, I didn't write this in my notes, but I just thought about it. And you want to take the money out because you want to spend it on something, you got a huge gain. Well, not only do you have to pay the ordinary income tax, you got a 10% penalty. So if you're younger and you're in crypto and you're in IRA, that's a big disadvantage. Okay, so back to Roth. Boy, I must be doing really good. I don't see any questions. There's one. There you go. I've had Roth for over 10 years. There you go. So she can transfer, well, not transfer. If she's allowed, depending on where her money is, if she's allowed to buy crypto in that Roth, then she can do that. Okay. So if you in the Roth and you take the 100,000 out and you're not in it for 5 years, the initial investment isn't taxable, but the excess would be. So you have to ask your tax advisor, number one, which IRA you should be investing in. And again, depending on where you buy your crypto, there's probably all these exchanges have different rules, and it's you just got to pick research, I guess, and pick the right one. Because you have to find an exchange that allows IRA investments. You also have to find the and what might happen, you might have to take money out of your IRA. Like I can't buy crypto in my IRA through my brother's brokerage firm. Okay, can't do it. So if I really wanted to buy through my IRA, I would have to take a distribution to me. Now I would have to take that money, and then I would have to buy the crypto in an IRA, self-directed IRA, and then I would have to report on my tax return that I put it back into an IRA within 60 days. It's not a direct rollover. It's a rollover, but it's reported a little bit differently. So I could still do it, but it would be better if it could go right from the brokerage firm to the exchange, but I don't know many that do that. Now, a disadvantage of buying crypto in an IRA, and it's a big one, and you really got to think about it. You can't take possession of it. You can't transfer it to your wallet. Because if you transfer it to your wallet, it's considered a distribution. Because the IRS doesn't know what you're going to do with that money. Once it goes to your wallet, you can probably do anything you want with it, and they're not going to know about it. So, because a wallet, it's just holding the crypto. There's no designation, IRA, regular, or whatever. So if you have to keep it in the exchanges, and we've already talked about, or you've already learned from Erwin and all the teachings, that we shouldn't be keeping large amounts in the exchanges. So I don't know how we get around that. I'm not sure if there is a way. So keep that in mind when you take possession of it. It's going to be treated as a distribution. Okay, so that's the Roth IRA. If anyone has any questions on Roth, on what we just talked about in the Roth, put it in the chat. I'll answer them immediately. If not, we'll go to the third one, which is the 401k investment. This is, let's assume you have a company that allows this type of investment. Not all 401ks are going to allow you to buy crypto, okay? Or precious metals for that matter. But if you are allowed to do it, and I would think over time, more and more are going to, as it becomes more and more popular, I would think there'd be a way to do it in the future, but who knows? So if you don't have, if you have no retirement funds other than the 401k, if you really don't have a lot of money outside of retirement, you need it to live, let's assume your um, emergency reserve fund is not really what you want it to be. You don't want to take money out of that to invest, because you really shouldn't, because we've always been taught that whatever you invest in crypto, you should be willing to be able to lose. So if you can't afford to lose 10 grand, you shouldn't invest it. But regardless, let's assume you want to invest in crypto. Your only way of doing it is with a 401k money. Well, there's two ways you can do it. Well, you can buy it through the 401k, but assuming the company doesn't allow you to do that, you either have to take it out and pay taxes on it. And if you're under age 59 and a half, you'll pay your penalty, or you take a loan out against it. Now, I've talked about loans twice over the last year, and so I'm not going to actually go over the rules, but there are many restrictions. Usually you can't take more than 50% out as a loan. So if you have 100 grand in your 401k, you can't take more than 50 out. And it has to be paid back over 5 years. But that's what I would recommend doing if you can't buy your crypto through the 401k directly. I would advise taking a loan and do not pay taxes on the income. There is an exception. If your income's not that high, you're retired, you got pension, social security income, and the distribution's not going to cost you that much. Okay, it's possible that might be an alternative than taking a loan. And the only way to do that is to crunch the numbers. You call your accountant up and he'll give you the what it'll cost you in taxes, and then you make a decision. But assuming you're going to take a loan, which is what I would recommend doing. Let's assume you take a loan out for 25, you have 50 grand in a 401k, you're eligible to take 25 out. You take 25 out for a loan, you buy your crypto, now you make 100 grand, or you make 200 grand. Let's use 200 grand. What you can do is pay back the loan, 25 grand. There's no prepayment penalty. You can pay it all back immediately. And now, because you bought it outside of the 401k, don't forget, you took a loan. The loan comes from the 401k and it goes into your own personal bank account. It's your personal money now because it's a loan. So now, if you buy and you make $100,000 profit, that profit is still taxable on your personal return. It's not in the retirement account because you took a loan out and or distribution. The only way it would be not taxed if it was in a 401k, if, like what Gary says, he buys his crypto in a 401k and sells it within the 401k, then there's no gain. So I hope everyone understands that difference. It's important to know that. So now you get to keep the 75,000, you pay back the loan, and now you do what you want with the money. It's taxable because you took a loan out. Okay. Your account is going to increase significantly if you keep it in the 401k. Okay, so now you had 50, you borrowed 25, you made 100, you put the 25 back. Well, now you got 150 grand in your 401k instead of 50. Now you can borrow 50 because your portfolio went up. That's if you buy it. In Gary's example, he buys it in his 401k. It goes up 10 times. Now he has more borrowing power in that 401k because it's worth a lot more. And he could turn around and now, if he can, I don't know, get precious metals, more crypto. When the crypto coins come back down, you can buy back at a low rate. Okay. So that is a way where you can increase your 401k balance and increase what is available for a loan. Therefore, you can increase your profits. Now, again, it's risky. You got to be willing to borrow against your retirement to invest in something that, most people wouldn't touch. So if you're willing to do that, fine, go ahead. So I hope everyone understands that. That's the 401k. And now you can't take loans all the time. You don't know how to take loans. It's either once a year or twice a year. I have it written down. I don't remember. But you just can't go back and back and back and keep borrowing. It's limited as to how many times you can do this. So now let's look what happens when you buy crypto with non-retirement assets. Money in your bank account, money in your stock portfolio. Let's assume you have 200,000 in stocks and you want to sell 100,000 of it. And now you got 100,000 to buy crypto. Maybe you've already done this. Most of us should probably have already done this because if you do it now, you're buying high. Okay. So if you have a $100,000 gain in this scenario, it's either going to be short-term or long-term. If it's short-term, you're taxed at ordinary income rates. We've gone over that before. And again, chances are that 100 grand could put you in a higher tax bracket. If it's long-term, that's taxed as capital gain, much more favorable. And your tax could be anywhere from 0 to 23.8%, depending on your tax situation. And it's probably different for everybody on this call. So I can't go into any details because I'd have to know your separate numbers. And don't forget, that's just federal, that's not state. All the states, most of the states mirror what the federal does. There are adjustments to some of the states have adjustments where they take out some income that's not taxed. They add something that is taxed. Maybe a deduction isn't allowed on state. But for the most part, capital gains on a federal level are usually the same number on the state level. Some states don't allow losses for capital losses. So if you lose money in crypto, you can't deduct it on your state return. Again, it depends on the state. I live in New Jersey. They have what's called a gross income tax. And it is gross, by the way, literally speaking. But it's gross because it doesn't allow a lot of deductions. So it doesn't allow losses. You only get taxed on the gains. You lose on the losses. So you have to know what your state laws are as well. So that's how that would work if you're selling it in that manner. So when you encounter gains, you need to project your taxes, both federal and state, at the time of your gain. Don't wait till the end of the year. Figure out what you owe. Okay, it's important. Why? If we sell in April and have these large gains, well, you don't have to figure out what to do in May. You got the whole rest of the year to lower that number to a level where you're more comfortable with. No one likes to pay taxes, especially when the government, what the government's doing with the money. Okay, so you want to try to lower your tax burden as much as possible. So, we're going to hold on a second. Let's see now. What else I want to go over? Hold on. Okay. So when some of us, some of us might have a $500,000 gains. Some of us might have $1 million gains. Some of us might have $20,000 gain. Depends on what coins you bought. It depends on how much you paid for them and when you sell. Okay. But we want to lower our gain to reduce our tax burden. That's what I'm here for. Okay. It's Erwin's job to tell you what to buy and how to sell and where to get it and when to do this, when to do that. But it's my job to try to instruct you how to lower your tax burden. So if you have $100,000 gain in April, you have until December to try and lower that. And you might have more gains in the future. If you have gains in April, don't forget precious metals and things of that nature. You might have gains in precious metals that you want to take into consideration, maybe in June, July, August, September, whatever. Those gains might be added to what you already have from the crypto gains. So this is going to be an ongoing process. You might have gotten out of many mutual funds. Some of the advice I've heard that's been given is to sell some of the stocks because we're expecting a crash in the market. Well, if you get out of stocks and you have a loss, you can take those losses against your crypto gains. You don't just net crypto gains and crypto losses. You net crypto gains with precious metal losses or stock losses, or for that matter, a sale of a land loss or whatever. All the capital gains that you have, whatever you're buying and selling, gets at the end added together to come up with the final bottom line number. Okay. So, if you've got a large crypto gain and you look through your portfolio and you really didn't sell the stock maybe when you should have, but now you say, you know what? It's going down. I don't think it's going to go up. I don't never like this stock in the beginning. I'm going to get rid of it. Well, if you get rid of it, you got a $20,000 loss on a stock. That loss will offset the 100,000, bring it down to 80. So again, that's why you got to look at everything you have to see what you want to buy, what you want to sell. And hopefully at the end of the year, you're going to come up with a situation that you can live with. So if you have so that's why I would recommend, again, this is a general recommendation because I don't know what everybody has in their portfolio. If you have stocks at a loss, I would consider selling them and reducing my crypto gains. So, here's another suggestion. Not every crypto coin is going to go up. There's going to be some dogs. There are some risky ones. So maybe you made money in Bitcoin, you made money in Ethereum, you made money in whatever, but you bought some coins, you put 5,000 into it, it's worth $300. You get advice from the group as to whether they think it's going to go up. Maybe between you and someone else, you decide you want to sell it. Sell it. Take the $4,000 loss and write the loss off against the gains. I highly recommend you do that. And here's why. Does everybody remember when I spoke in my first few talks about the wash sale rules? Who remembers the wash sale rules? Put your hand in the chat or say yes in the chat. I know Lori does because she never misses the calls. She's on, I think, every one, if I'm not mistaken. Okay. So if you have that situation, but you like the coin, but you lost money, but someone says you really what you're reading, what you believe, maybe a prophet said it's going to go up, whatever. I don't know. I'm just using these as examples. You really want it, but you want to reduce your gain. You in crypto, you have the option to sell it immediately, buy it back, and you can still take the loss. That I think out of everything I've ever, and I was not aware of this before I started buying crypto and researching and learning a lot about it with taxes. I didn't realize that at the time. I just figured it was treated as a capital asset. It would be a wash sale rule, but no, it's not. That loophole will close. I don't know when, but it will close. I can guarantee that. So that would be something that you would want to do. For anyone on this call that doesn't understand what the heck I'm talking about, the wash sale rule is if you buy stock today for $100 and you sell it in a year for a loss, you can't buy it back until 30 days. Otherwise, when you sell it, it's not treated, you can't deduct the loss. So in crypto, you can sell it, take the loss, and then if you really like the coin and it's at a low price, I mean, it would have to be at a low price if you're going to sell it for a loss, then just buy it back the same day. Buy it back 10 minutes later. If it's a good price. If you think it's going to go down further, then wait and buy it when it goes down further, or dollar cost average your way up to where you were before you sold. So that is an excellent strategy to use, and I highly recommend you thinking about that. Okay. You can also, to reduce your gains, any capital asset, precious metals, stocks, bonds, land, a second home, and a rental property that you've been wanting to get rid of for years. And, of course, now it's high. You're probably not going to have a loss, but I'm just bringing these up because I don't know everybody's situation. So that's you can net anything against anything to come up with a bottom line number. So there's many considerations that we have to look at. Many of us might be restricted in what we can do, right? If you're working and you can't put in an IRA, you only have a 401k, and you got to deal with that. So you have to make the best decisions you can with the restrictions that you have. You can't, you just pray about what you're doing, allow the Holy Spirit to guide you. You have people in the group that you can call and ask questions on. You can get advice from other people that are in the group. Don't hesitate to ask your tax advisor to help you through certain issues. If you have questions throughout the year, if you don't know what your tax bracket is, you can call and ask. I have people that'll call me and says, what is my tax bracket? And I tell them. I don't know why they want to know. It doesn't matter. They ask, they get an answer. Before I open up the floor for any other questions, tax questions related, there's got to be at least one or two. It's tax season still. I'm only halfway done. That's how much clients procrastinate. And I got 3 weeks to get done to get about 175 returns finished. But anyway, one thing I want to bring up has absolutely nothing to do with what I just spoke about. Jesse probably might even be able to add to this. I see he's on the call. Yesterday, or 2 days ago, I called up where I get my metals for my IRA. Thanks to Jesse, I used money metals. And yeah. And I was asking about copper, and they says you can't, I never knew this, but you cannot buy copper in an IRA, in a retirement account. You can buy gold, silver, platinum, but you can't buy copper. And that didn't make any sense to me. It still doesn't, even after I got the explanation. But I was told that you can't buy copper in a retirement account. The IRS sets strict regulations for the purity of precious metals allowed in a precious metals IRA, which is what I have. Has to be 99.5% pure. And I wrote in my notes here, I don't understand the logic behind this. I still don't. Nobody can even try to get me to understand it because it makes no sense. So, but if you want to invest in copper, and I even asked the lady, yeah, he said copper is a base metal and not IRA approved. I didn't realize. I don't know why. It doesn't make any sense to me. I don't know what a base metal is compared to. Is that means it's not a precious metal? Is that why, Jesse? Yes. Okay. There's my truer answer. She didn't say that. She just talked about the purity of the metal. So I guess it's not as precious. So if you want to buy copper, and I even asked her, how about silver coins with 90% silver and 10% copper? And she says, no, can't even do that. So if you ever want to invest in copper, which is cheap, and you have to do that outside of a retirement account. That's just something I learned yesterday. And I promised everybody as I start to learn different things about either metals or crypto, I'll bring it to your attention. And that's what I'm doing with that one fact. So with that said, does anybody, it's 10:08. Yeah, the IRS makes the rules for the, yep, I do know that. But it makes no sense to me. But anyway, doesn't have to. The IRS doesn't make sense. Half the rules don't make sense. And this is coming from someone who prepares returns for 45 years. So with that said, does anybody have any comments about what I've said? Any tax questions, crypto or non-crypto related? Feel free to raise your hand. Joy can open you up for to talk. Or if you just want to type it in the chat, you can do that as well. Let's see, do we have anyone? I don't know. Can't tell.
I have my hand up.
Gary has a question.
I just wanted to make certain this was correct information, if you could answer it for me. But I was told if I had a crypto that I invested in, and whether I made money or not, if I took that out and invested in another crypto, long as I didn't sell, that wasn't considered a taxable event and you didn't have to report that. Is that correct?
No. If you buy a crypto coin, and what you said, you sell it and you're buying another one. Is that what you said?
I guess it would be considered, well, maybe you could convert it, but say I had, I don't know.
If you convert one coin to another, it's a taxable event. It's a sale.
Even if it's like a conversion on Coinbase, it doesn't matter. You still have to report it.
That's correct.
Okay.
If you're on Coinbase and you swap and you convert ETH to XRP or vice versa, it's a sale. It's like you selling it, taking the money, putting into USDC or whatever, and then buying it.
Okay. So then it would be the same thing if we send money off Coinbase to a gold crypto, that would still be considered a sale then?
Yes. Correct.
Okay.
Yep. It's really it makes doing a tax return a nightmare.
You see, I was told the opposite, that as long as you didn't sell it, it wasn't a gain.
Well, it's considered
And
a sale.
that they were saying converting wasn't considered a sale.
It
So
is a
they
sale.
tried to give me advice like, for capital gains, as long as you don't sell real estate you haven't gained, it's not until you sell it. So yeah, that's completely different than what I was told. Okay.
Right. Right. Who told you that? Not Coinbase.
No, people who
Oh,
had been in stuff that supposedly got advice in this investment club that I'm in. But I wanted
oh,
to double check with somebody because I had a good bit of that done last year that I think I'm going to have to report this
yeah.
year.
There's a question on the return. That, and Mary, as we'll go to Mary after I answer Gary. There's a question on the return at the front of the top of the page of the return that asks if you've sold, exchanged, converted any crypto. And so if you look on your 1040, page 1, up at the top, it has that question in the middle. And if you check yes, the IRS is expecting you to report something on your return. If you say no, but it should be yes, the only way you're going to get caught is if you get audited or if the IRS gets 1099s from either Robinhood or Coinbase or what have you. Next year, they're going to be issuing 1099s. This year, they're not doing it. But next year, they're going to be required to issue 1099s for transfers and stuff.
Okay, thank you.
Yeah, Mary, you had a question?
Yes, hi.
Hi.
What about I buy the USDT in Coinbase and transfer to different exchange? And
If
I
you,
just,
yeah, if you mean you're not buying anything with it, you're just putting it into an exchange.
well,
Yeah.
after I transfer USDT to another exchange, I
Exchange,
bought
then you bought it.
cryptos. Yeah, I
Yeah.
bought cryptos because they're required to buy with only a USDT.
Right, right. If you transfer from your exchange to your wallet or another exchange, it's not a taxable event.
It's not
It's only when you put it into
Sell
that
it, you mean.
exchange and then buy and sell in the exchange, then it is.
Okay.
All you're doing
But
is
just transferring USDT to buy another cryptos in different exchange. That's not
right,
taxable. Okay.
right.
Should-
But I have a feeling, I looked at my report and I wasn't going to show any sales because I didn't sell anything. But when I looked at my year-end taxable statement, it showed a lot of sales. And I think the reason why is because when you put money into USDC, I think that's considered a coin. And I think when you then buy the coin and you take it out of USDC and you purchase a coin, I think that they're treating that as a taxable event. Now, there's no tax because you're buying it for $1 and selling it for $1. So there's no gain. So I
Right.
might go back to before I file my return, I might go back and look at that report
Okay.
and instead of saying no, check yes, and then just put whatever I put into Coinbase that I bought other stuff with, just show it as a wash. I might do that. I might not do it. It's not that big a deal.
Okay.
But I just look out for that.
Okay. I have another question. This is not about cryptos.
That's fine.
My friend, she just started working like about June or July last year. And this company is from foreign company. It's like a marketing company. And this company does not issue W-2 form. So she's trying to the fire tax, and the CPA she is involved in, the CPA said that, well, I mean, last probably June or July, her income was around little less than 49,000. And the tax the CPA says she needs to pay is over 10,000 because the company did not issue W-2 form, and the company did not pay their portion for her, the federal tax and all that. So the CPA is saying that she has to pay the federal tax, the portion that the company should have paid. That's why out of less than 50,000, she has to pay 10,000. Is that correct? That she has to pay?
I would probably tend to agree with the CPA who said that. I had a case once where that happened. But if they're paid in US dollars or they paid, I think my situation was I had a client that had money that was earned from another country, and I think I had to convert it to US dollars. But if they're taking foreign taxes out of that paycheck, if the country she's working in is taking
No, she
foreign
lives in
taxes.
California. She lives in
No,
California.
I know she lives in California.
Yeah.
I'm talking about the company that's paying her. If they're taking foreign taxes out of that, then she gets a foreign tax credit on her return against the U.S. income. But yes, he is correct. She's a U.S. resident earning income abroad and needs to pay it needs to show the
And
income.
also the company is in California too. It's just that the company by itself is from foreign country, but they're not issuing W-2 form. Yeah, and she doesn't have any withholding tax.
That's a problem. That's a unique situation, and it's I'd probably try to find another.
So it is correct that my friend
I would
pay
I would agree with that guy. Yeah.
Okay. She has to pay the double portion of federal tax, that means.
No, not I would geez. I'm not sure about that. You're talking about
because
Social
double
Security,
portion
Medicare.
means
You're talking about
my friend's federal tax portion plus the federal, the portion that the company should have paid for the employee.
I know what you're talking about, Social Security. Yeah, you're talking about whether that person is self-employed or not. That's a tough thing that she's going through, and I'm glad I don't have a client like that because that's not an easy type of return to do.
Yeah,
but then,
I mean,
yeah,
it's crazy. So
it is crazy.
I thought I should ask you.
It's a shady company. That's the answer to my question. It's a shady company. Laurie mentioned gifts not taxable. I need to deduct that amount. Yeah, you're welcome, Mary, from my Coinbase report. Yeah, you really, yes. Well, yes, from your basis. Is that what you mean? Laurie? Want to put Laurie on, Joyce? So I could hear her. She's trying to talk. Or Laurie, can you unmute? Dad.
Well, no, I guess I can't.
Yeah, gifts are not, you can give a gift and it's not taxable.
Okay.
Yeah. Yes, that's true. And you would deduct it from your basis.
Okay.
Yep. Anybody else have a question, comment? I hope you got something out of this. Let's see. Anybody else? Anybody have any questions? No. Okay. Well, if there's no other questions, I really don't have anything else to talk about right now. There's been nothing new on the horizon. I imagine after tax season's over and things settle down, There could be some more pronouncements or things coming down the pike, but right now, the only thing I will say to end the call is the IRS is starting to scrutinize all of this much more carefully. They are getting all these companies to prepare 1099s. You can see just by the question on the return that they're getting ready to move forward, I think, to do more scrutiny. And I believe people that are in crypto, you're gonna just have to have good records. That's all. And it's easy to determine what your sale is. It's not so easy to determine what your cost is. Selling price is easy. Whatever you sold 100 coins at that date, at that much which you got back, less your fees, that's simple. That's your selling price. But it's not as easy to figure out what to go against that selling price to calculate your gain. And that's where accountants are struggling because their clients don't have records. I just did just an example before I close. A client of mine came in and he gives me this Coinbase report. I mean, it was like garbage. I couldn't understand anything. I had no clue. Other than the final results at the bottom said a minus loss and a minus loss, short term and a minus long term. And I couldn't make heads or tail out of the schedules he gave me to tie into those numbers. I didn't have a clue. He didn't know what his cost, he just assumed that they were doing it right. They printed out the schedule. There must have been 1,000 transactions on it. And there was no way he was going to pay me to go through it, and there was no way I was going to spend the time to do it. So all I did was take the summary, the loss to this, put it on a return, and I attached the schedule to a form that you're allowed to mail in, and I just mailed it in. I told him, look, I don't want to be responsible for this. This is what it shows. He says, fine, do it. And I did it. I had no clue whether it was right or not. And the burden of proof is on the taxpayer. And if he gets audited, he's going to have to prove that he had a loss. So the easiest way to keep track of your gains, you buy a transaction, you print out the transaction report, whatever you want, whatever they call it. I have every single time I bought a dollar cost average, $200 here, 150 here. I have every single one in chronological order on a spreadsheet. If I sell something, I can know exactly what I paid for it because it's simple. I just did it. I didn't use a software exchange or a software company. I did it on an Excel spreadsheet. And I have one Excel spreadsheet for each coin. I only have 6 coins. And I know exactly what I put into the coin. Okay, I know exactly how many shares I bought. And everything's in chronological order. So when I do first in, first out, if I sell, I go to the first part of my worksheet. I just subtract how many units I sold, and I just keep working down and down until it's all gone. So it isn't that difficult. Okay, you just have to do it right from the beginning and get it. And once you get it right, it's not that hard. It really isn't. Okay, so with that said, thank you, Jesse, for those kind words. If there's anything else that anyone wants to say before we hang up, if not, again, I will always, as I always do, before Joy cuts us off, I'm gonna put in my chat, like I always do, the email. I have gotten quite a few emails over several months, maybe about 15, not that many, 20. And I've answered everybody's questions. So, and I'll continue to do so. Go ahead, Gary. We'll make this the last one because I don't think anyone.
About with the spreadsheet and how you kept track of everything from the beginning, Would you be able to either maybe have a form or put that in something? Because I'm somewhere where I can't write down everything, but I'd like to have something like that to use to basically have records and not have a nightmare like what you just explained.
I just have 3 columns. Date I bought it, the dollar that I spent, dollar cost, the cost of it. Like if it's $300 worth of cost, put $300, and then the number of shares that I bought. That's all I do for each coin.
And you have something that you're using, like a computer form you're using to list this in?
I put it in Excel,
Okay.
and that's it. And every time
And
I
you
buy
do
something,
that you have.
I just add it. And if I want to know what my average cost is, I just take the 2 totals at the bottom, the what I spent, divide it by the number of shares, and it gives me my average cost of all the transactions.
Okay.
And that's all I do. That's all I do. I don't, there's 3 columns. That's all I do. I'd recommend everybody do that. Date you bought it. And look, you can, if you just started a year ago, I believe you could, I don't know if you can go on, depending on the exchange you're at, you might be able to go on these exchanges and print them, the transactions out, or they're still listed there. There's a history of each coin. And you can go into the history of each, I mean, you can with Coinbase. You just go into the history of each coin and you could just, I don't know if you can put it into, I don't know if it'll go from Coinbase to Excel. Maybe you got to take a picture of it. Maybe you just got to write it down. I don't know how to do that. But I remember looking at one of the history of one of my coins and it was all there. Everything I bought for the whole year was all there. And it's a simple thing to do. Date, the cost of the purchase, and the selling price. The selling price. Oh, and the selling price. I put the selling price in there, so there's 4 columns. Date you bought it, the dollar amount of the investment, the number of shares, and I did put the price I paid for it.
Okay.
That's it. And you just run it all, you just keep a cumulative all the way from when I started. I haven't sold anything, so it's all just, I just sold something in March, but that's next year. I'll worry about that later, after tax season.
So that would be good enough, because if the the burden of proof or whatever is on the taxpayer, would you still need like records from Coinbase or whoever to back that up? Or would you think they would accept the spreadsheet that you make?
Well, they accept the spreadsheet, but Coinbase tells you what you sold too. So you need to print out the sales, the report, the gain and loss statement of Coinbase, because that tells you what you sold and bought and sold. So you need to tie the 2 together. Okay.
Okay.
You do need to tie the 2 together. After tax season, give me a call and we'll chat about it.
Sounds good. Thank you.
All right. I can't do it right now, but after tax season, we'll chat.
I understand.
Okay. Any other final questions before Joy signs us off? Lord, we just want to thank you for this call tonight. I thank you for the people that stayed on the call and asked all of their questions, Lord. And I thank you, Lord, for everybody in this training class, school, students, teachers, everyone involved, Lord. I just ask you, Lord, that you will give supernatural wisdom, supernatural favor to everyone on this call, to everyone in the training academy, Lord, supernatural favor, that you will protect all of our exchanges from any hacking or anything, Lord, that you will supernaturally protect everybody's exchange, everybody's wallet, everybody, Lord, that you will continue to bless us, continue to bless us financially. I thank you, Lord, for what you're going to do in all of our lives. I thank you for the wealth transfer. I thank you, Lord, that you want to bless us. And I thank you, Lord, that we choose to receive your blessings. In Jesus' name, amen. Okay. Joy,
Thank you, sir. Simeon.
go ahead.
Thank you, everyone, for joining for today. I hope you all have a good night.
Okay.
Welcome, Lori. You're welcome, Mary. Thank
Yeah,
you,
Lori
everyone.
and Mary, thank you for your questions and your comments. I appreciate it. Jesse also and Gary. It's important that we have a little interaction, that it's not just me talking. And so I'm just glad I can answer your questions. Feel free to go back and listen to the call again if there's something that you wanted to hear again. Because it's not easy to digest everything. God bless everybody.